Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Gold in for a New Run? Gold's price stabilized higher in the latest session since yesterday, as new updates from measures taken by the US Federal Reserve surged in media headlines. Despite the matter being the dominant headline for the time being, and is something we will be getting into with more detail, there are other happenings that are also possible gold price movers. This report aims to briefly detail some of the most important and relevant fundamentals affecting the gold market at the moment, and also provide a conclusion at the end, stating our personal opinion. Starting with the latest and most important development, as noted in our intro, is the Fed's decision to construct a portfolio of corporate bonds to support the economy and uplift economic activity. This is a monetary policy action, and for the most part, it was announced rather unexpectedly. The most evident reaction from the announcement was the weakening of the US dollar and the subsequent strengthening of gold's price. With this action, the Federal Reserve is continuing to pour more money into the economy. By supplying more money, the value of the dollar tends to become cheaper, so demand for gold tends to increase. It is also believed that the Fed may continue to bring out monetary policy actions in the next months in order to enhance the economy's recovery, which may produce more bullish tendencies for gold in the future. However, on a more general note, even though these actions seem to help increase liquidity for the economy, printing money leads to an increase of national debt, which is already a big problem, specifically for the US, and increases long-term risks. On a separate note, the US government, backed by the Trump administration, could be preparing a new fiscal stimulus move that is also in the market's focus and could possibly move gold's price. In a very recent report, Bloomberg stated the stimulus action is regarding an amount nearby $1 trillion, which could be dedicated to an investment in infrastructure. A fiscal stimulus move could be possibly used to stimulate the economy, and it helps create jobs. In our opinion, and due to the significant amount of money stated in the report, we view this as a loose fiscal policy action that tends to support the currency. In this case, the impact on gold's price could be negative, and we could see a drop in value in case of an announcement. Also, during the following days, we expect some upcoming financial releases to possibly create volatility for gold's price. On the 17th of June, we get from the US the housing starts figure for May, while on the 18th we get the initial jobless claims weekly figure and the Philly Fed Business Index for June. Even though the forecasted figures for the pre-mentioned releases point to a swift recovery for the US economy, we would advise traders to be cautious and look out for any surprises, as they could create strong market reactions that lead to opportunities or dangers. As a conclusion, there are enough concerns around the global economic outlook that tend to keep investors' demand for gold pretty solid. First, some analysts consider a second wave of coronavirus outbreak a possibility after in the previous days we saw an increasing number of cases in some states in the US and in Beijing, China. Even though these countries could see new waves of virus cases, the fact that authorities are now prepared for such a scenario minimizes risks somewhat in our view. Moving now to our technical analysis, this is gold's 4-hour chart. Gold is currently trading between our R1 1733.50 resistance level and the S1 1721.50 support level. If the upward momentum formed in the latest 4-hour sessions continues and the metal surpasses the R1, then the road is set for the R2 1745 level to become a target. Even higher, we have also noted the R3 1753.50 resistance level for a possible continuous bullish momentum. In the opposite direction, if a selling trend forms, the first possible stop could be the S1 1721.50 level. Lower, we have the S2 1708 line as the next stop, while even lower we have also noted the S3 1696 support line. We must note, in June, the highest price reached so far to the upside is the R2 1745 level, which could be considered a barometer in a bullish run, as it has been tested various times but not breached. While the lowest price reached in June was approximately 1670, which was only momentarily, and gold corrected higher in the following sessions, never to fall so low in June until this moment. The RSI indicator below our chart is running between the 70 and 30 level, but leaning to the upside, possibly displaying the bullish action seen in the past sessions since yesterday. If you found something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time and enjoy solid trading.